Hi, I'm Sandy Botkin, CPA, tax attorney, and former trainer of IRS attorneys nationwide. And I'm also the author of my newly upcoming book, Achieve Financial Freedom, Big Time. Let's talk about automobile and the methods of writing off a car. They're essentially, car is funny. It's a big ticket item. And yet it's one of the most audited areas by IRS. And it's interesting that most people don't realize how important car is to their business. It is worth thousands, but if you don't know what you're doing, you end up losing thousands. That makes sense? There are essentially two methods of writing off a car. One is called the actual method, and the other is the IRS method. Now, what is the actual method? The actual method is where you write off a percentage of your various car expenses based on your business use. And you would write off part of your gas, your oil, your insurance, your wash, your wax, your depreciation, repairs, and so on. So let's say you use your car 80% for business, 80% of all those items become deductible. Now the IRS method is in lieu of all that. But IRS gives you a flat 55.5 cents a mile for every mile you drive for business. In addition, they give you 23 cents a mile for medical and moving. These are the current rates, which by the way do change with inflation. So every time you go to a doctor, every time you go to a dentist, you should be claiming the medical rates. If you move out to a different city or move to a different state, you should be claiming, in this example, 23 cents a mile. In addition, this is something that a lot of people miss. You should be claiming 14 cents a mile for charity. Every time you use your car for charity, you should be claiming 14 cents a mile. For example, my videographer went on a mission for his particular church. And he drove to the center where he was taken to the airport. He should have been claiming 14 cents a mile to and from that center. Many times you render services. Maybe you're on the choir of your local church or synagogue. Every time you go there for practice, 14 cents a mile. If you're not doing this, you're losing out and you're losing money. Now, when is it best to use the IRS method? Remember, IRS gives you 55.5 cents a mile regardless of whether the car was new or used. Whether you had 50,000 miles on the car or 0 miles on the car, IRS still gives you 55.5 cents a mile. Whether you drove an expensive car or a cheap dog, IRS still gives you 55.5 cents a mile. So obviously the cheaper the car, the better the deal. And the IRS method is generally ideal for cars that cost under $20,000 and where you put on over 20,000 miles per year for business. If you put on over 20,000 miles for business and the car costs you generally less than $20,000, you're probably okay with the IRS method. Now, there's one more thing I want to mention that a lot of people miss. This is a really big deal. And I hope you're paying attention because this really is a big deal. The IRS method is in lieu of most of the actual expenses, in lieu of most of your gas and repairs and insurance and wash, wax, depreciation, repair, and so on. But there are some things you get in addition to all that a lot of accountants didn't know. For example, you can deduct the interest to the extent you used your car for business. And you can deduct sales tax to the extent you used your car for business. So let's take an example. Let's say you use your automobile 80% for business. Even though you use the IRS method, you can deduct 80% of the interest in that year, 80% of the sales tax incurred in that year. Let's say the next year you use it 70% for business, then 70% of that year's interest is deductible. Many accountants are not aware of this, especially if you use the IRS method. If you use the IRS method and you think your accountant did not deduct any of the interest or sales tax as a business expense, you could file amended tax returns if you have a business and go back up to 3 years to claim the interest, a portion of the interest and the portion of the sales tax as a deduction. I can tell you, I know someone that got a refund of over $5,000 doing this. This is a big deal, folks. If you follow my advice, you will really make your life a lot less taxing.